All right, welcome back for the episode of Carnivore Trades. Today is Wednesday, August 2nd, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today here. So markets down pretty precipitously, down 1.37 on the spiders. Triple Q's down over 2%. They're almost 2.25. Dow down 1%, and the Russell down as well, getting hit, down 1.36 there. We can see today, finally, got a little update here as far as technical picture, finally. So we do have technical damage. So take a look at this right here. Higher high, right? And we make a little low, lower high, and lower low. So we now have daily chart lower lows and lower highs on both the spiders and the triple Qs here for the first time since March. You've got to go all the way back to March before that, the last time that was the case. So right here, we had a higher high. We did have a low, but we had a higher high. Here, it didn't happen. Higher high, higher lows. First time we've made that downtrend. And we have violated, finally, and closed below this trend line. And the daily 20 moving average, 450.44, slight close below that. Let's look at the SPX just for fun. Yeah, so slight close below on the SPX as well. Triple Qs, we've been following this trend line for a long time. I'm saying, look, they're running out of gas, right? Like you can't just keep violating it and trading through it like that without pushing off of it. It tells you it's starting to lose energy here. And pretty good volume on the sell on the Qs, about 70 million by the close, just short of 70 million. Again, lower lows, lower highs. Is this the end of the world? No. But it is technical damage, and there's really no other way around that. There's no way of escaping that. You broke the trend line, you broke the 20-day for the first time. And I mean, let's forget that. We'll pretend that it doesn't even exist. For the first time since really May, right? On the triple Qs. The spiders, first time since May 24th, we've broken that. So a little technical damage here. Now there's caveats. There's things there, as there always is. Volume here on the spiders, not great. I mean, it picked up towards the end, 91 million. So we did have a pretty good power move into about 7 million shares there at the end of the day, last 10 minutes. But not 100 million. And that's kind of my psychological key marker. We need to break. We need to get above 100 million for it to be heavy distribution and really signal a top. Does that mean that we have not topped? No, it's not mean we have not topped. Does that mean we're close to a top? I think so. We do have Apple, Amazon Thursday after the bell, obviously. Could that mean that we pump up one more time into 462? It's certainly possible, right? But you've got that first distribution pressure now, right? 1, 2. That's a pattern. That's 2 times in the last week we've seen distribution pressure. We now see daily chart lower highs, daily chart lower lows. Triple Qs 1, 2, 3 times in the last couple of weeks that we're seeing distribution pressure, distribution volume. I've talked about this. The Qs are going to underperform relative to other sectors. What sectors were doing well today? Healthcare up 7 basis points. XLE did get hit, but that still has higher lows. XLF came in and held the 20, right? So financials, healthcare, energy leading, tech slipping. What's the king of the market? What's everybody's favorite stock or most hated stock? NVDA, daily chart, lower high, lower low. Distribution volume, 1, 2, 3. So we are, and by the way, that distribution candle, reversal candle, that's held still on NVIDIA. Does that mean we can't make a new high? No. Speaking of semiconductor stocks, AMD reporting. Gap and crap there. Big move down. 172 million shares. That is probably top tier. 1, 2, 3, 4 lower highs there on AMD. Definitely weak. But NVDA, the kings of the market here are starting to show weakness. Microsoft, again, lower lows there, and a lower high. Obviously we have Apple, Amazon coming up here, and that will matter. Tesla also the same thing, kind of coming down to that 50-day. We talked about the reversal there. Netflix, same thing. although it didn't take out this low yet. But point is, big tech weaker than everything else, and I do think that theme continues. Anyways, Apple, Amazon. Could we get a bit up? Apple still holding trend, still have the nice uptrend here. Possible lower high, no lower low yet. Then Amazon here, same thing. Lower highs, no lower low yet. So that's still holding up. Could they pump us up one more time? Yes. Could it result in a lower high? Yeah. Maybe we go up here and tag this trend line. But either way, I think we're kind of running out of gas. So again, it's been an amazing run. We're coming into seasonality too, right? Mid-August, summer, around that time, volatility tends to bottom. By the way, I talked about this the last couple of days. I said volatility is getting coiled up for a pop. And, we had that pop last week. We never took it out. We stayed inside and we got a pop today. What was the story today? Everybody's going to talk about the Fitch downgrade. That matters, but really what it comes down to, I think, is Janet Yellen. She said 500 billion in issuance, and it's actually 1 trillion by the end of the year. Market, I think, is starting to realize that reverse repo can't soak up all of that, and we're seeing yields get a huge bid here. 30-year up 1.5. We'll talk about yields in a second, but let's get through the levels first. Anyways, I'm starting to ramble here. Spiders, SPX. We did some technical damage. We'll see how this plays out tomorrow. Maybe they pull the rug again and we get another ramp up. We'll have to see. Tomorrow's close will tell us a lot more. Do we reclaim the 20 moving average? If that happens, that puts us in more favorable position going into Apple and Amazon. If we can't, the odds of a lower high are a lot higher. If we reclaim it, then the odds of a higher high are a little bit higher, right? So either way, we've done some damage here, and we'll continue to take it one day at a time as always. Here's your max upside right now. In the short term, 46.35. Right now, a weekly candle on the spiders, that's engulfing, essentially. It's engulfing the whole body there, outside move down. If we look at the Qs, same thing there, although this trend has been starting to weaken out for a while. But either way, we'll watch those levels again tomorrow. And then if we continue lower, it's pretty obvious, right? 50 moving average. And then you have this bigger, 100 moving average coinciding with this trend. Those are levels to watch. Obviously, if we have topped. Bare minimum downside. If we do, again, we're getting ahead of ourselves here, but you got a fat gap here on the ES at 4,300, right? So that I think is kind of your bare minimum downside. And, I would think like a week or two ago, you'd be called a dumb bear for calling for that. But I mean, it's really not that far away. It's only 150 points. And when you consider the size of the move that we've made, if we just take a fib here, that's not even a 382. I think you ultimately get down to 4,200 on a correction. Again, we're kind of projecting a little bit far out here, but these are just kind of some preliminary targets here. If we have topped, it's possible. But again, Apple, Amazon, watch tomorrow's close. That'll tell us a lot more. Anyways, before I continue rambling, one thing that tells me this is probably not quite the top yet is the Russell. If you had a daily chart lower low on the Russell and a lower high, I would say there's a higher, much higher chance that we've topped. We're holding trend here. And again, financials, energy, they make up a lot of the Russell, and they're holding up. But KRE backed off today, but it came nicely off the lows. KBE came nicely off the lows. XLF came really nicely off the lows. So Russell 2000 still holding up. I still think that gets into the 200, 202 area. That's certainly possible. Can't rule that out. And that could be kind of your last gasp there for the market. But until that really starts to break down, we have 2 out of the 4 major indices showing some serious technical damage. The Dow never quite made a lower low. 350.204 low of the day here, 350.211. So not quite there, and we did have a higher high anyway, so there would have been no chance to confirm that regardless. But again, we're starting to see that slippage. Markets are starting to kind of, run out of steam here. Eventually everybody who wants to buy has already gotten in. Yesterday was first of the month. I'm sure every pension fund in the world was forced into NVIDIA. And now you're seeing, hedge funds distribute into that. So that's my take on it anyway. Let's get over to the semis as we talked about them there. Still holding this damn trend line. I mean, just like unbelievable. This just does not want to give back anything here. Eventually this will break, of course. But right now, good day here for the bears. Distribution volume 1, 2, 3, multiple times in a row there on the semiconductors in the last couple of weeks. Once this breaks, I don't expect the 50 to be that much support. It's already kind of close to price as it is, and then 150 though will be your kind of big psychological level there on the daily. You break that again, there's a huge air pocket down here. So semis can have some downside. There's your 20-week moving average upsloping there. They are very overbought, and they're still holding up though, so we still need to respect that. Again, that's why I'm kind of leaning towards maybe get one more push up, maybe one more bear trap that happened today, and then we'll kind of reevaluate it from there. But semis, nice outside day down. IGV outside day down as well, gap down. Now guess what? What did we talk about yesterday? I said IGV is still holding up really well. Nice defense of the 20, and now you're curling back up. Guess what? In one day, you just made a lower high and a lower low. Confirmed there on IGV. So there's some technical damage there. Losing the 20 moving average for the first time since May. Where again, we're not even going to count that little fake token down day that we had in June. So right there, back below 355. Weekly chart resistance still that 367 area. We'll see if we close back below 354, we'll just say 355 here on the week. Could be a sign of more downside to come. 20 moving average, upsloping trend line right there could be your downside targets. For cloud software, Dow Transport's also red on the day. Again, really steep uptrend here. Didn't take out yesterday's low though, so nothing broken here on the transports, but definitely still a lot of resistance you can see up there around that 16.6 area, which we talked about as being a level. And we got up to about 16.7, 16, yeah, just about 16.7. Yeah, that's, if I'm seeing that right. Yeah, 16.7, 17. And that's common. You get overshoot there. We did kind of violate that trend line a little bit, but we held yesterday's low, so it's holding up. If we do start to have a bigger corrective move again, 15.5 is your big level on the transports. But again, they came in just like everything else. Okay, rates. This is what matters. This is what everything's about. And this is the big story, and it's going to be the big story moving forward. Okay, so Fitch downgrade, but Yellen issuing all that new debt. A lot of it has been soaked up by reverse repo. Remember, that was the bear case in May and June that Treasury's gonna issue a ton of new debt, and that's gonna bring the market down. Well, you are seeing yields rise, right? I mean that's happening, and I predicted that. But the markets haven't cared. A lot of it's been soaked up by reverse repo. But I mean, these patterns, I say them every single day in these videos. This is a bull pattern here. It's very strong. It's setting up for a break of this double top. Fed funds rate right now, effective, is at 5.33. Okay, so it's actually pretty high, or pretty significantly away from here. But if you get above that, I know everybody's talking about positioning, everybody's talking about this, talking about that. That's my tipping point for the market. You get above this area, let's just mark it in. You get above this, that's where you're going to see volatility. All right, I'll fix it later, but you can see it there. That's the level. Last time we got above that, we had a big sell, and we got right back below the Fed funds rate, and that's why the markets, went back and rallied. But that's the level. You can see it there. 5 years holding up really well. Inside bar bullish. 10-year new highs, or I should say new highs since February. Not a coincidence that the market kind of topped out or bottomed out in March, and this is when yields, and same thing with October, yields bottomed. You have the market bottoming. 30-year ramping up. So I told you 4.2, that's where it went, pulled back there. That can still get to 4.25-ish before having to pull back significantly. One thing I will say, take a look at the yield curves. 210 starting to uninvert just a little bit. 3-month 10-year starting to uninvert. 5s and 30s, 10s and 30s uninverting. If that happens, it means recession's here. We're not quite there yet, but if that continues, keep that on your radar. Anyways, housing, XHB coming in a little bit. No real damage there. That's still holding up really well. ITB, same thing, still holding trend. These just will not give anything back here, but down 1% on the day. Pattern is still strong, and I don't have a sell signal on it yet. VNQ finishing at 84.63. So this is actually constructive here. We went back down and effectively tested the 200. 84.09 was the low of the day, and we came off the lows. So this looks okay for right now. Again, weekly chart I think is fine. Nice inside bar, 1, 2, 3 pullback. That can still get a pop. So VNQ is holding up okay, and nothing's really changed there. What would really change that if you get below, I think it's 83.24 on a weekly close would negate that most likely. But VNQ hanging in there okay. XLF still holding up again, 36 to 36.25 is your big resistance level. KRE Again, backing off, that's still okay for a move to 55. KBE still okay for a move to 45. And broker dealer is still okay for one more pop into the 530 level, but still really overbought and extended. So I'm not chasing it or touching it right up here. Crude backing off nicely, down 2%. Didn't quite get to my 83 number, but you did get to 82.43, so just shy of the weekly red bar high of 82.72. And we got a nice outside candle down there. We'll watch this pattern here. So it was a little overbought, right? We're up like 22% in the last month. So it's going to have an outside move at some point, down 2% on the day. We'll see how it reacts into this area. So now we have to watch this trend line here on the weekly. We back test that and it holds, and you can make a case of this one too. Extend that out. They're all kind of in the same area. So, you know, if it's strong, that should be support. But crude backing off, we'll continue to watch it. I'm very intrigued by energy right now. But crude holding up, is backing off there. It's overbought, needs to do that. XLE backing off too, down 1.3. That's looking interesting as well. They did give back some gains. Watching that one for pattern. Not bearish on energy at all. XOP down 1.63. We talked about that. A lot of resistance up here, and it's overbought as well. So that did need to pull back. And OIH just doesn't want to give anything back, although it was slightly down here today, but still really steep uptrend. And that looks poised for a move into that 360, 370 handle. Nat gas just continuing with these choppy waters here. So we got to throw these trend lines back on, because we had them on a few weeks ago, but we started to kind of push up here, so took them off. But now back into this channel. So right there, you're inside of that up move. And now you have this upsloping trend line, which is possibly back in play going into tomorrow. A little bit short-term oversold here. And we do have inventories tomorrow, so we'll see how that shakes out. Again, weekly pattern still looks good here. A nice up move and a big bull base there. So we'll see if that can get going there. But did back off again a little bit. And it's just been in this, I say tight range, but it's just really like a 40% range here. On this chart, it looks very tight, but lots of choppiness here, but still has that big base on the weekly time frame, and we'll go with that until proven otherwise. All right, back over here. Let's look at the dollar. So DXY holding up again. So Wednesday, we're closed above the weekly resistance. Now, my gut says that because it's Wednesday, they'll probably pop this down Thursday, Friday. So we'll see. But right now, if this was the Friday close, I would say there's a bear trap in play on the DXY. So we'll watch that going into the end of the week, but that's the big level there. Dollar's had a nice comeback, and it looks pretty good here. Do you need to get a weekly close above this, though? Just because it doesn't, you know, if it gets hit tomorrow and Thursday, or tomorrow and Friday, doesn't mean that it's broken, but, you know, you could still close above it next week. But, yeah, I'm just neutral on the dollar until it tells me otherwise, but that's the level to watch, obviously, going into the end of the week. But again, we'll take it one day at a time there, but nice rally back on the dollar, and it's holding up. Can't really say anything bad right now. Gold backing off as you'd expect. So finally filling that little gap there. Get a little bit of a bid off the lows. Nothing much there. Still using the GLD to chart it a little bit. If it starts to roll over, though, probably wants to go test that 200 moving average. If we break through that, then we can talk about lower prices. We probably have a lot of support around 170, which is going to be about 1850. Again, that was kind of my original target if we didn't bounce here. But we got a bounce, and we got that contract gap, and now kind of coming in a little bit. But gold seems to be holding up just fine. Nothing terrible. It's kind of getting a split bid here. You get the downgrade, so that's kind of bullish gold, but then bonds get destroyed, so that's kind of bearish gold. So it's kind of not picking a direction right now, but those are the levels I'm watching regardless. Silver down move. I remember I got a lot of emails a few weeks ago about like, Aaron, why did we should have bought silver, you know. I'm like, this will give you a chance to get in. It's silver. You know, you could have chased it up here and you'd been out of the money still. Definitely never chase those metals. They always give you a chance to get back in. But silver coming in, holding the 50 MA, kind of losing this bullish structure we talked about yesterday. So if I can draw my trend lines, there we go. And I guess it's still kind of in play, right? So it's not terrible. Little channel there, but I would prefer not so much of an outside move there. A little oversold short term, probably needs to bounce here. But if you start losing these levels, it's down to 21. That area I think is a buy. But right now, silver coming back in. It's on the softer side. Platinum backing off as well. I'm rooting for that to get down a little bit lower, which I think it will. Palladium, nothing going on there. I still want that lower. And then copper follow through to the downside. So engulfing reversal yesterday, follow through today. You break this trend line, it's down to 370. And then you guys know I'm obviously looking for a move still to 340. Bitcoin, interesting move here. So we had kind of that bear trap look yesterday. We had a big surge in the after hours and big surge overnight, and then we came back in. Bitcoin can't really figure out if it wants to be risk on or risk off. Like I just said with gold, it's like we kind of got a bid off the Fitch downgrade. If you look on the hourly, like overnight, you get this huge pop. We got up to that weekly daily resistance level I talked about, 30,200. High of the day, 30,001. So very close to it. And then we came back in. Daily charts, still you can make a case as a bear flag, but the weekly is still really good here. So I still like it on the weekly, and we'll see how that shapes up moving forward. But Bitcoin, just in a big choppy range here, and it has been so really since mid-June, but did come back in today. And again, it's in that kind of phase where it doesn't know if it wants to be risk on or risk off. But again, those levels are still the same there on Bitcoin. Okay, lastly, again, just to look at the spiders, tomorrow's close is very important. You know, if we reclaim the 20 moving average, that I would say it increases the odds of a pump on Apple by a lot. If it's below, then that increases the odds of a lower high if we do pump on Apple. So that's what we're going to be watching here. But either way, we do have technical damage. I don't have anything saying that there's a major top in place yet. Volume's not there. And I would feel a lot better about it if the Russell was down. Russell's a risk-on index, so when that's performing, you generally want to respect it. However, we are definitely seeing signs of distribution. And I think the closer we get to seasonality, meaning quarter three, you want to be a little bit more careful with this market here, especially considering how much we've been up on the year. You're not going to go up 45% on the NASDAQ and not expect to give back a good chunk of that. So, by the way, speaking of that, you know, like a few weeks ago, I talked about 320. And, you know, at the time, it seems like, oh, that's insane. Like, what are you, a perma bear? But if you think about it, 320, that's just a 50% fib retrace. I mean, if you're a bull, that's kind of what you want. So that's kind of a big level. And I mean, there's an air pocket here on the weekly. There's no support. I mean, there's a weekly channel there too, but there's no support here on the weekly time frame until that level. So if we do start to correct, you get, I mean, the yield curve uninverting, there's lots of headwinds, inflation bottoming, seasonality, those could be targets to look at. So anyways, guys, I'm gonna wrap up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all tomorrow.